Good evening, traders. Let's recap today's market action. Gold saw a significant jump, up 3.33%, hitting a two-month high. Silver also surged, gaining 3.84%. U.S. equities were mixed, with S&P futures up 0.21% and Dow futures rising 0.24%. However, Nasdaq futures dipped 0.17%. The Russell futures climbed 0.46%. The VIX, our volatility gauge, dropped 6.12%. In the rates market, the U.S. 10-year yield fell 1.13.4.65%, and long-duration treasuries, or TLT, were up 1.69%. The U.S. dollar index weakened by 0.86%. U.S. dollar index weakened by 0.86%. U.S. dollar index weakened by 0.86%. The U.S. dollar index weakened by 0.87%. Crude oil saw slight gains, with WTI up 0.14% and Brent up 0.41%. Key news today included gold's rally to over a two-month high, driven by a rally in long-dated U.S. Treasuries. This Treasury rally followed the U.S. Treasury's announcement of increased nominal long-end buybacks. Moderna also surged, up over 90%, after positive late-stage melanoma vaccine results. Geopolitically, the U.S. State Department is discussing Syria's sovereignty and Israel's right to self-defense. The U.S. military has also opened a protected shipping corridor in the Strait of Hormuz, allowing 15 to 20 tankers nightly. The U.S. total public debt outstanding has now exceeded a record $40 trillion. Looking ahead, keep an eye on tomorrow's EIA report for U.S. natural gas inventories, expected to show a 19 billion cubic feet increase. Also, SPCX shares face an IPO-related lockup release tomorrow, August 20th, involving up to 319 million shares. That's your market wrap for today. The desk should separate fresh catalysts from background commentary and wait for market confirmation before upgrading a theme. If the same story keeps crossing without a broader move, it remains context rather than a new trading signal. If rates, the dollar, commodities, and index futures begin to confirm the tape, the next brief should elevate that theme. Until then, the useful question is whether the headline flow changes positioning, liquidity, or the next scheduled risk window.